and Doug Flynn, co-founder of Flynn Zito Capital Management. Doug, let me start with you because this enthusiasm, again, we saw it a lot. We've seen it a lot over the last 2 weeks when all these earnings reports have come out. These retail earnings report. The CEO of Target said he's never in his entire career seen an environment like this. Walmart posted a number no one thought they could ever post again. This morning, Children's Place had their best same-store comp in history. And it's all being driven by people hitting the streets, leaving their houses. I mean, do you see this continuing?
I actually do. I think it's not even just that corporate earnings are at an all-time high and will continue to do so based on how things look. But even if you look at small business, which is really where I'm talking to small business owners, the NFIB Small Business Optimism Index just came out with the highest rating it had in 35 years. And that's something. It's not just big companies and all that they're doing because everybody likes to lament the big companies, but it's gotten its way all the way down to the small business owners and they're hiring. And that's why we have more job openings than we have people to fill them right now. So until we solve all that, there's going to be a lot of growth and a lot of continued growth and optimism.
Michelle, are you seeing and feeling the same thing?
Absolutely. And I'm extremely bullish. I really think that you're going to see potentially a few more years out of this bull market. And I know yesterday we were chatting about $15 trillion of cash on the sidelines. Well, the interesting thing is about $1 trillion of that is in the hands of private equity firms. And when you think about the leverage that PE firms uses, that could be 20 trillion of dry powder on the sidelines just waiting to get in. So I'd say that's going to push the market even further.
James, you know, the only thing that scares me is that everyone is pretty excited. Right? So it's like, golly, I wish there were a few more bears. I love when everyone's bears, right? But it's hard to ignore the tea leaves and it's hard to ignore the facts. It's hard to ignore the momentum. But are there things out there that could derail this? I mean, let's say, for instance, this whole political drama ratchets it up. The Democrats take the House. Would that present a threat to this economic revival?
It could. When President Trump was talking about how the markets would tank if he was impeached, I took it to mean he meant if he was impeached and then driven from office. There are not going to be enough votes in the Senate to do that unless there's a lot of new information. But if he is pushed from the scene, I think it's reasonable to assume, yes, markets would go down because we've had this Trump bump essentially since his election. He enacted the tax cuts, the regulatory
What's the intangible? We know what President Trump has done, right? Is there an intangible also, though? I mean, you know, when he was elected, the first businessman, we just heard from a business legend in New York here in studio. Is there an intangible also that business people get, that they feel a certain extra confidence? You can't measure it, you can't poll it, but it's there and they're acting on it.
Well, I think it's the regulatory environment, because if you look at what Trump has actually eliminated, it's not a ton of money in the grand scheme of our economy. 5 to 10 billion a year, basically, according to the administration, is the deregulatory effort. But just the fact that I think for the first time in a lot of our lifetimes, there is not some new big pending economic regulation being cooked up in Washington. And I think that's the confidence he's talking about. And it's not just, we talked about a lot of this data measures of optimism. It's not just optimism. Businesses are investing, capital expenditures rising, and that's what I think gives people a lot of confidence that this has some legs.
Yeah, I mean, that was the case with President Obama. It's that you always knew something else was coming up. You know, the regulatory efforts on dust particles, on dirt roads, on ranches, the things for factories and the particles in the air, they rejiggered, life expectancy for people who worked in different areas. So every time they came through with something that cost billions of dollars, they justified it by saying, well, we're going to save 20,000 lives. I mean, you never wanted to figure out how they came up with that, Michelle. Right. So isn't just the removal of that, obviously it's been enough. Yeah,
absolutely. And we can't forget about the tax cut. I mean, corporations are having lower taxes, and hopefully the idea is you're going to excite the corporations, get those animal spirits going, that not only are they going to invest, but they're going to invest in the United States.
And Doug, let me ask you, because I think, this is the kind of momentum. In fact, I think what we're looking at is what the Fed could not ever achieve under President Obama. I thought they did enough to save the economy, but they can never get it going. They can never trigger or spark that virtuous cycle. I feel like we've done it organically, and I think it's hard to turn it off once you turn it on.
You know, it's funny. I've been doing this long enough to know, if you go back 8 years ago, there were a lot of my clients on the right who really thought that the world was coming to an end, and that was the end. And people I talk to now on the left feel the exact opposite way, but they don't believe that there were people 8 years ago who felt equally and opposite that they do. And what you have to do is you have to look a little bit deeper into finding the opportunities. But the difference is exactly what we're all talking about here. There are more opportunities overall because of the deregulation, because of the lower tax cuts, and just because of the overall employment opportunities that we have. Business is growing, and you have to get back to that. All translates that people are going to have more money in their pocket, and they're going to spend it, and that's what's going to drive corporate earnings, and they're in the market.
Real quick, you had something real quick?
Yeah, just look, your clients aside, Democrats, you look at surveys, are investing just like Republicans. So they may really dislike Donald Trump, but I think they know where the economy is headed.
They're investing like Republicans, and they're shopping like Republicans. I can tell you that right now. Thank you all very much. And speaking of optimism,